Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, March 8th. Today, we got ADP employment change came in hotter than expected. Again, US creating unexpectedly more employment than previous one and also than expected. So labor market remains super tight. Jobs opening 10.8 million. We were expecting 10.5. At least it's a sign in the proper direction, but still that equates to 1.9 job openings per available worker. And I mean, Feds are watching really careful these numbers, and these numbers are not good. Trust me, these are not good. And job quits less than before because people is under pressure to remain viable in their spending, so they need money. But still, employment change and job openings are still showing signs of labor market strength. And finally, Fed Chair Powell testimony. Same idea of yesterday. Fed's Jerome Powell is still super hawkish and is opening the door to 50 basis points. And as you can see, analysts are already expecting that 50 basis points with 76% of probability and with a terminal rate of 5.5 to 5.75 around the end of the year. This is going to be painful. I'm always saying that this is going to be huge for household, families, businesses, and overall economy. So let's see how the markets reacted. And as yesterday's price action, this was yesterday. We were chopping around, we ended lower, we held during pre-market, waiting for the same. And then, as you can see, games are being played. One top in tail, one bottom in tail. One bottom in tail, one push, one rejection, another bottom in tail. So I'm not trading in this market. Unless something big happens, this is just uncertainty. And dollar is flat on the day, still pushing for that 200 moving average. I'm sure that is going to happen. But the 2-year it's a little bit higher and the 10-year is lower. So the inverted yield curve is going nuts to the downside. This is huge. This is really huge. And this is showing you that recession is very probable. Almost certain that is going to happen. Bonds market are already pricing in that. And you have to be aware that this kind of price action, this is the daily on the Nasdaq futures, this kind of price action still rejecting this pivot. And if you check higher time frames, the 30-minute chart, for example, we are still showing signs of support at 12,100, but still lower and faster time frames are chopping around, basically cutting everyone's stops. And I mean, this is not a market to trade, at least in my opinion. This is too risky and this is going anywhere. This is not going anywhere. Well, the only thing that is good, at least, is that crude oil it's still in the red. Crude oil is still in the red, minus 1.20 today. And Tesla is suffering due to Elon Musk doing its thing. I mean, it's losing this support that, as you can see, was really interesting to see. But I really think we are at least going to test this gap, this open gap. I think is going to be tested, and I expect Now that we broke down again 200, we rejected 200 levels, I think Tesla is going to suffer a little bit, and most probably, since from there to there is like 11% until this area of 160, and I think here bulls will demand again the stock. That's what I'm saying. Nvidia keep pushing on AI hype and nothing else on these markets. I really think that this is an interesting level, 287. I really think we need to be patient even more than yesterday to be able to profit on this market. This market is untradeable. Trust me. Experienced traders are just on the sidelines, are waiting. What are waiting? Well, don't forget that tomorrow we have jobless claims, and on Friday we have non-farm payrolls and unemployment. And this is going to be the last drop, the last thing that Feds and everyone's watching, because remember that yesterday's and today Powell said that they need to have the complete data, the complete picture. They are not saying 50 basis points as a certain probability, neither 25. They need to have all data available. And this is one big important chunk of information: unemployment rate and non-farm payrolls. If this comes hotter than expected, right now we are expecting unemployment rate to remain flat. If this goes higher, that would be good, because more unemployment means less labor market strength and less spending and payrolls. Look at this. Let's focus. Remember that the last time we hit a double, we got from 260 to 517 on January. This February, we are again expecting a retracement to the lowest, 205. And that's going to be key. The same for manufacturing payrolls and hourly earnings month over month on year over year. This is going to be insanely important for Friday. And once we have that kind of information, then I think I will be trading this market. Right now, there's nothing for me. We are just shopping around, either accumulation, either distribution. There's nothing for me in this market. So I'm going to remain patient and remain disciplined, wait for my opportunity this Friday. That's all. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always, but remember that the trading day is not over yet. We are right after lunch hour, and we are, as you can see, this is just insane price action. Choppy, not worth. So be careful there. And remember that discipline and risk management are your best friends for your success. Stay safe, everyone.